Hello, I'm Gaywin from Accrue Real Estate and I'm here today with Belinda from Ripple Finance. Welcome, Belinda.
Thank you, Gaywin. Thanks for having me.
Oh, you're welcome. And Belinda, we have some questions that our clients ask us, repetitively actually. How does an offset account work?
An offset account is basically a transaction account that's linked to a home loan. Any funds that are sitting in that offset account, you don't pay any interest on that portion of the loan. So for example, on a home loan of $400,000, if you had $10,000 sitting in your offset account, you're only paying interest on $390,000. So you don't pay any interest on the funds that are sitting in your transaction account.
Thank you. That's interesting. It makes your savings that you have work harder for you.
Exactly. It's a really good way of being able to save interest that you're paying over the term of the loan and reduce the term of the loan by having those funds sitting in that account as opposed to a separate savings account that's not linked to the home loan.
Okay. And banks are not usually proactively calling their customers and suggesting ways that they could pay their mortgage off quicker. But also, how does a finance broker work compared to a bank?
A finance broker has access to a wide range of lenders and products. So when you're dealing with a finance broker, you're dealing with someone that's completely independent of the lenders. So they have access to not just obviously the products available at one bank. They're very familiar with all of the different types of products on offer. The guidelines vary quite a bit between the different lenders, so whilst you may qualify for a certain loan amount with one bank, you may not with another, so they'll be able to give you a really accurate borrowing capacity with the various lenders. They'll also be able to tell you perhaps what's on offer in terms of the different types of combination loans, so fixed and variable rate products. Brokers will also have access to the bank's pricing department, so you'll often be able to get a better deal through a broker than what you would get yourself going in off the street. So brokers will often lodge a pricing request and say, we've got a client that's sort of borrowing X amount, this is what the property's worth, we're looking for this sort of rate discount, what's the best you can offer? And then the lender will come back and make an offer. So brokers will often do that with a few of the different banks and say come back. So effectively the banks are really sort of then bidding for the business, so your broker is able to look at comparing what those best offers are and put them into a comparison chart for the client.
So if one has several credit cards or other debt, how would debt consolidation work with a...
Well, credit card rates are obviously considerably higher than home loan rates. So we often say to clients when they are particularly looking at refinancing to certainly consider consolidating those debts, and instead of paying higher rates on personal loans and on various credit cards, consolidating that debt, putting it all into the one loan, and obviously paying a far lower rate than what they were paying with their various other facilities to work at getting rid of that debt.
That would make considerable savings then.
Absolutely, because they're paying in terms of rates under 3% versus the 18% that they would have been paying on a credit card. That's right.
If you're looking to buy an investment property, a lot of people don't think that they're in a position to buy an investment property because they don't have any substantial savings in the bank. How would they do that without savings in the bank?
Sure. They can certainly access equity in their existing home to get that money together for a deposit to put down on a new investment property. So it is, providing you have the equity, it's certainly possible to borrow 100% plus costs and have the debt secured by both their owner-occupied home and the new investment property that they're purchasing. So they don't necessarily need to have physical cash in the bank available. They can borrow that and have it secured by their existing home.